Right, good morning to everybody. Can you hear me loud and clear? If yes, give me a thumbs up or put an L and C, please. Okay, guys, morning to you, Jerry. Morning. All right. Morning to you, Darren. Morning to you, Judy. Morning to you, Allison. Morning to you, Vincent. Wow, you guys, first time. Okay, probably you know that today will be the last Facebook session that we're going to do my so-called MAO, right? We're doing this for more than a year. And of course, the response has been pretty good, all right? We have a high of nearly 130 people watching at the same time. On average itself, by the end of the day, about 400 to 500 people. Not too bad, not too bad. The reason I said before why we are moving on is because we felt that, right, it's much easier to post the videos as and when it's timely. And also, I need to concentrate more on the development of the app and also to concentrate on building a new project. So all these things are right. I kind of realized that it's going to be difficult for me to do my regular commitment to all of you. So that's the reason why I felt that, right, to give the best out of it is that I do periodic video and then upload it so that you guys can benefit from it as well. I think that will be better and much more responsible. So today, indeed, is my final Facebook edition, at least for this year, that's for sure. So let me just bring to you right now my share screen. Okay, let's go. Okay, today is the 31st of August, the last trading day of the month, and also I think it's Malaysia holiday, Malaysia National Day. I think so. Yeah. Okay. As once again, today is going to be the Facebook final edition. Okay, that's going live right now. All right. So the thing is this: we all know that there's this particular quote that we all roads leads to Rome, right? Okay. So now the thing is this: apparently now there's another twist of it. It's all routes leads to market selling. Okay, I'll be talking about this more later on as we go into the alternate market news. But nonetheless, it's all right. I'm going to give you a parting advice for today. Okay, a parting advice is that start to protect your trading capital. Really start to protect your trading capital. All right, and if not, right, you have to start praying very hard. Because not only I'm saying that right now, there are a lot of people, okay, and these people are not the regular analysts or economists or experts or trainers or gurus. These people are the federal chief, okay, or the federal officials, okay, the presidents of different the states. So I'm going to cover them very shortly. But the more important thing is that I just felt that you should be very careful of what's going to happen right now. Okay, so that's the reason why you can see that today I purposely on my collage itself, right, I purposely put the Rome building there itself, and then to tell you that just be careful because anything can be once beautiful and nice and gorgeous, but after a while later, if you do not protect it itself, right, then of course you do expect things to get very, very ugly. Okay, so I think it's more or less you get an idea now. Okay, let's further ado, let's start. All right, so definitely it's all right how to locate the new videos. Now, don't expect the new video to be up tomorrow. Okay, tomorrow and this Friday, I'm gonna take a little short break to really get myself prepared for next week. Where the videos will be, it'll be short videos, like maybe between 2 minutes to 5 minutes to maybe the most 15 minutes. The videos will be uploaded here. All right, go to YouTube now and find Trade with the Boys, okay, and then subscribe to it. So which means that anytime when there is any upload of videos, it will be all inside here itself. Okay, you will see that my brother Chang Yao Tong, he is a main video here itself. I think this video is definitely worth more, should have more viewers, because you know why? This video itself, right, is done in Cantonese, and I can tell you the way he shared about his view in 2020-2021 pandemic itself is excellent. You should really watch it. Okay, all right, you should really watch it, and I love his voice with Cantonese. Okay, so my point is this: the videos will be here, so you need to subscribe to it here so that whenever I pump a new video up itself, right, you can actually watch it right here. Okay, Go to YouTube, find Trade with the Boys. Okay, don't go to the wrong one. Okay, there's a few replica, and then those are nonsense. Okay, all right. Okay, all right. Let's go. Let's continue. Okay, moment. Okay, so you can check all my past video. Thank you and kudos to Susan, who have been doing a great job to pump up all these videos timely for all of us. Okay, these videos are all made available all for you here itself. Okay, so guys, if you need to watch the past videos, instead of going through Facebook, you can watch them all over here. Okay, it's all there. Okay, from the very first day. All right. Okay, so disclaimer apply as usual, my friends. Okay, thank you, Ames, once again for contributing so much to our this education. And of course, now we're going to move to the next level. And I know that Ames has so much things to share with us. That's the reason why I need to give my full commitment to them itself with regards to this new movement here. Okay, all right. Now I'm so sorry my light here itself is kind of dark today, and my lamp is off, so you cannot see my face that clearly. You know, a bit dark. That's the best I can do. I can't do anything further than that. Okay, so apology on that. Okay, all right. What's so sad? Today is the last day I cannot show my face properly. Okay, never mind. Okay, so I can have it. The lighting is pretty bad today. Okay. All right, now let's go to the Wall Street joke of the day. Okay, you're right, son. Addiction is a very sad thing. Fed tightening, please help. Now, we all know that the bulls are all relying a lot on the Federal Reserve to make sure that the ship continue to run. But we also know that, right, this cannot be forever. And we also know that, right, this is not going to be helpful if, let's say, people don't understand that the inflation problem is really giving all a problem. Now, I'm not too sure how you feel it right now. I've been testing about this itself, right? Now, initially, when inflation hit us at the start, because it's still like not a lot. So everybody's still okay. From chicken rice, from $3.50 to now $5.50, people pay $2 extra. They may not feel that pinch at that point itself because just $2 increment. But the thing is this, as you realize that now the laksa you're having, the popiah you're having, the noodles, the chap chai peng, whatever, right? All the prices went up. Then your pay has subtly been there for quite the same since pandemic until now. So the question comes in, is that if the pay of yours is still the same and the prices around you is going up, how would you feel? That's the first thing that you must understand. And of course, when the price goes up itself, and if let's say we can, as a consumer, we can choose to take in lesser, but those people who cooks, they have to maintain the same standard, right? They have to maintain the same supply, and that is bad because if people like us, consumer, don't go for them, and all the food that they cook will be all wasted. You understand my point? So there will be a problem coming in. I am foreseeing that things will get very scary in the next few months' time. Now, I've been saying this since the start of the year. I'm not going to change my topic. I believe that the next few months will be very, very bad. Okay? Now, it may not be reflected by the stock market because if the stock market wants to buy up the sell, right, naturally nothing going to stop it. But it's just a matter of time when if the people have problem having food to put on the table and cost of living kept on increasing, then we do have a problem. All right. So the thing is this, why would there be a problem? I thought things is good. Well, earnings will be affected, that's for sure. Earnings will definitely be affected. This is without a doubt, okay? And of course, if earnings affected itself, right, then definitely employment will be an issue because if people are asking for a higher pay and the company is not able to, give it to them itself, right, then you should expect things to get very bad, okay? So that's the reason why I felt that, right, we should be very careful, and I think that we should be looking out for this thing. I think I'm going to just change my position. Maybe you can see me better. Yeah, not better already, right? Okay, all right. So that is my view here itself. So let me tell you now why I say joke of the day, all right? Now, we have this guy called Kaskari. He's from Minneapolis. He's a federal, one of the federal officials. He's saying that now, right, this market itself, inflation is really ongoing right now. And the thing is this, right, it is very serious that the Federal Reserve wants to bring down inflation back to 2%. But we have a problem here. The current inflation now is at 8.5%. Maybe it'll drop to 8.3% later this month. But my point is that it's still a very far fetched from where we are right now, which is like now from where we were. That's right. We were. It was like 2%, and on average, now we're talking about 8% right now. Okay. So the thing is this: Not only he is saying that, we have another Fed official, one more popular, Williams from New York. He is saying that right now, right, he don't expect any chance of a reduction of rate hikes until 2023. That means that they're expecting more rate hikes along the way. So a lot of people is expecting rate cuts in 2023, but Williams said, no, this is not going to happen. I'm so sorry. Don't expect things to be so simple. And I think that he makes a lot of sense here itself. Really, he really makes a lot of sense here. And that's why I felt that we should be very careful on this right now. Okay, no joke about it. Yeah. Okay. So that is Williams, and of course we have one more guy. He is Richmond, all right, from Richmond. Okay. Now he's saying that right. He's expecting, and I mean the Federal Reserve has promised that they're looking to bring down inflation back to 2%, and because it's nothing to do with employment, it's all about inflation. So as long as inflation doesn't goes down to 2%, seriously, they'll do whatever it takes to bring it down. So if employment has to be sacrificed for inflation to come down, that is what Federal Reserve view at the moment right now. So the question is this: do you want to fight with Federal Reserve? So think about this, it's all right. We have seen it before over the years and years and years. If you go against the Federal Reserve, right, there's only one thing will happen to you in terms of trading account. You get hit, you get bit, you get bust, all right? So that's the reason why I felt that, right, we shouldn't be taking any chance of that. Now, very interestingly, JP Morgan actually came in and said that, you know what? No, I think it's okay. As long as the US job data is good, it will be bullish for the stock market. Okay, so we have contrary view right now. One of them is very reserved people. The other one is the analyst. The analyst is saying that, right, don't worry, man. As long as the US labor numbers are okay, it's actually a bullish sign. Okay, so the question is this: who should we believe in? Should we believe in these strategies, or should we believe in the Fed officials? So key your answer right now today. I want you to key your answer today. Let's ramp up the comments. Right, what do you think? Should we believe in the Fed officials, or should we believe in the analysts and the economies or the strategies? All right, please key your answer right now. Do me a favor, key your answer right now. Okay, I wait for your answer while I get some messages coming in and stuff like that. Okay, so as we are saying right now, all right, should we believe in the Federal Reserve? And I tell you that, let's ask ourselves one thing. The Federal Reserve in 2009 came in and they said that they'll turn on the tap and they will stop at no cost to recover the market in 2009. And that was all the way back to the Lehman crisis. And really, they printed more than $3 trillion during the period of time. And that's where the stock market from 6,000 plus, the Dow Jones went all the way up to 15,000. It's just a short period of time. So the question comes back in again. So now during the pandemic time, during COVID period, the Federal Reserve came in again and said today I'm coming another $3 to $4 trillion, and we have the Dow Jones from 26,000 recovered all the way up to 36,000. Okay, so what I'm trying to say over here is pretty clear that we shouldn't even dare to think to fight against the Federal Reserve. Okay, so this is something that you must understand, and I'm very, 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 very clear to what to share with you. All right. So without a doubt itself, I can see that Leon, Stephen, Ping, Jude, Jerry, all are coming in to say that you guys believe in the Federal Reserve, and I also believe in it. All right. Of course, Susan, as always, says that let's believe in TWB chart. I also agree. All right. So the thing is this. He has been bullish on the stock market from the very first day of this year. And of course, all right, his trading calls have been incredible. Almost every time he called for buy only, the market actually comes down. Oh my God. So there's this thing saying that, right, if you are Marco's client, you should be crying all the way because you're always buying at the high itself. Okay. All right. So this is the Wall Street joke. They say that, okay, wait for Marco to turn bearish, sorry. Wait for Marco Kolonovic to turn bearish. Then that is a time to heavily buy into stocks. So as long as he's bullish right now, one should just stay out of the market or stay bearish. All right. Anyway, this is joke of the day. Yeah. Now for me, it's all right. I have been telling you guys since 2 days ago regarding about the US market. I've been very vocal. I've been very direct and not twisted my words. I say that very good chance that we will see the S&P 500 dropping by 600 points. Now, sorry, on that day itself, I think I said wrongly. I said 6,000 points. I got it bad. Okay, it's 600 points. I expect the S&P 500 to drop by another 600 points. So now the S&P 500 has 4060 on Thursday, on Monday. I expect it to go down all the way to 3,400. Okay, now the last time we also expected that to happen, but the market, well, decided that nope, they need to bring the market up again, and then from 3,650, it rebounded strongly above to 4,250. So this time round, I believe that if the market is to go down, this time round, it will not be stopping at 3,650. It should be going to a new low for this year itself, and that'll be 3,400. Okay, of course, again, I can be wrong, but based on what I'm seeing right now, right, I kind of feel that the chance of this happening itself is 85%. Okay, I'm quite 85% sure that we will see probably this by when? Well, by when, that's a word, right? By when? I believe by mid-October. Now, of course, you all know that usually whenever I put a date or a time onto the screen, usually there's a good chance of it happening, okay? All right, now why do I say that, right? There's a few good reasons. Let me explain this to you, okay? Let me explain this to you today, yeah? Okay, now first of all, we all know that September is used to be the very sideways market, okay? Usually one of the worst one in the entire 12 months. So that is one thing to take note of. Now, we also realize that a lot of crises happen in October. So we saw that in 1987 we had a crisis, right? Back in 2008, the October market was at the peak itself, similarly. But of course, we also know that after that, right, the Federal Reserve will come in to save the day and the market recovers. So I cannot deny that, right, we might be able to see the market coming down all the way to 3,400 first. And then after that, right, if the market have any extra reason to come in to buy up, that will be a good time, all right? So that's how I feel, right? So I believe that this might happen. So how many of you think that I will be correct? How many of you think that I will be spot on by mid-October 2023? Oh, sorry, my bad. Oh, I'm so sorry. The date is wrong, 2022. Oh my God, my bad. Sorry. Sorry, not 2023, 2022. I forgot the date. So sorry for that. Okay, how many of you believe that, right, I will be correct? So if you think that I will be correct, just put away, Cal will be correct. Okay, so which means that, right, if you think that I will be correct, that the market will pull back down to 3,400 by mid of October 2022, please key the word Cal will be correct. Okay, so let's see whether you guys have the foresight and whether you all believe in what I said. Okay, all right. So of course, the current price now is at 4060 level, 4,000 level. It's not too far away, but still, nonetheless, it's not easy to call because all my fellow trainers that I know or people that I don't know, I've been observing their market calls, and I can see that, right, they were initially very bearish, but the market rebounded, expected. Now they are very bullish, and the market's coming down. So all I can say is that, hey, maybe we have something. We maybe have something here itself, okay? So I'll leave it to you to decide, okay? So you guys make a view over here, okay? Okay, all right, thank you very much. Apology for the typo error. All right, so remember this chart I shared with you yesterday, on Monday. So this is the chart, and I told you guys that I strongly believe that we will see the market dropping down to 29,563. And I explained to you how I get it, right? For those who didn't get it, let me explain this one more time for you. This is the 2020 peak, and this is the 2020 peak breakout, and this is the 2022 support. So if the market will come down, right, it will have to break back below the 2020 peak. And of course, this is 2018 peak. This is where it repeatedly as a peak itself. And then when it turns from resistance to support, right, I strongly believe it'll come here. So that's the reason why I felt that, right, maybe the Dow Jones can go below 27,000. It could be a touch and go this time around. It means that you just touch it there, and then after that, it rebound. Something along that direction. So that's the reason why, because I'm so confident in this potential move itself, right? That's the reason why I felt that, right, maybe if I concentrate more on this move here, there'll be more money to be made. Okay, all right, so that is the reason why we are moving towards this particular direction, and we just want to see more people really making money than just only going for courses and then after that they are on their trainer on their own and they don't make money. I think as a trainer, most responsible thing is that to make sure their students make money. Now, a lot of trainers, they do collect a good amount of money from their students for class fees, but I realized that they don't really help their students to get to where they are promised. So that's the reason why instead of just only talking non-stop, I kind of thinking that maybe I should do what I'm supposed to do and then help more people directly. And then of course, let us hit our target in terms of wealth ASAP. All right, so that is my point here itself, why we are moving on in certain areas. Okay, all right. Okay, thank you very much. Thank you, this Stephen, Jude, Peng, Han Yu, Susan, Jerry, thank you very much. Now there are 70 of you online right now. That's a cool number. Let's see whether can we hit 100 by today. Now let's quickly share with your friends right now and say that this guy is talking a lot of market views and listen to him. Why not? Let's listen to him, okay? Okay, later on itself, right, my alternate market news will be a lot of details, so it will be very exciting, very important. Please watch it, okay? Please watch it. Now, this is the Fear and Greed Index, and I cannot imagine this. I'm quite stunned with this number. We are at 49 and the last number was 53. Yes, indeed, it dropped from 53 to 49. It's a drop. But I just felt that this number is a little bit not accurate, yeah, in my personal view. So I want to show you this right now. You can take a look right now, right? We are now in terms of market momentum. We are off from the moving average or the 125 days moving average, right? The 125 moving average itself should be at 41.37 and we are now at 40.30. So we are about 100 points away from it. So the last time we see something like this was here, whereby when the difference between the MA and the S&P was about 300 points away. So if we put it back to today's number, that means that today's number, right, is at 4134 is the S&P moving average. If we minus another 300 points, we get about 3850 around there itself. Now this one was even further away. This one was where the S&P 500 was at 3600. All right, there's a low back in June. The moving average was at 43.46. So the difference itself is nearly 600 points. So that is what I felt that the market could be going down. So if let's say now the current number is at 4134 minus 600 points will give you approximately about 3500 level. All right. So that's my feel that it can stretch to there. But once it goes there, I believe that the market will rebound. So remember this, about 3,400 level, do consider to buy back your shorts and then consider to go long. All right. So I'm going to write it down for us for the time sake itself. Today is the 31st of August, 2022. Look to go long when the S&P reach 3,400. Okay, now at 40.30. Disclaimer. Okay, I've given you my views right now at the moment. Let's continue. Now the stock price itself is quite incredible. The stock price at the moment now is pretty high. I mean, since May, the stock price has been moving up, and of course, July, that is where the market bottomed in June. The increment was very strong. But if you notice that, right, we are back to January level. Now in January, the S&P, the Dow Jones, is at 36,000 level. So now where we are now, we're at 33,000 level. So there's a bit of problem here, guys. Okay, I'm trying to explain this to you. Is that here itself, the Dow Jones at 36,000. Now the Dow Jones at 32,000. Yeah, 32,000. Okay. So the thing is this. Okay, so if you look at it right now, right, it seems that, right, we are now at a discount of almost 4,000 points from between, and we're at the same level now. So if the market were to pull back down to the same point here itself, right, then of course, mathematically, we may be able to see the next number, which is at 27,000. So that is the reason why I felt that, right, there should be a little bit more room of downside to go, okay, a little bit more, okay? So again, this is just my personal view on this. Of course, I'm entitled to my own view. You do your own disclaimer and you make sure that you do what you do, yeah? Now, the market breadth itself is definitely very strong. Look at it. The market breadth is even higher than October 2021. So what I'm trying to say now is that the market breadth is stronger, but yet the Dow Jones is weaker. Okay, so what does it mean? It is a pure diversion. And of course, we know that, right, in June itself, right, or July period, my God, look at it, how it shoot up, right? That time itself, the market breadth was at 52 according to this Michelin volume summation. But now, in August 19, it went to 1,400. Oh my God, how much it went up again? That means it went up by almost 25 times or more. Oh my God, or 30 times, in fact. So this type of movement, right, is very scary and it doesn't make sense. And that's why I felt that, right, a pullback justifies everything. Now, the put and call option, as you can see right now, is also increasing bit by bit. Now, the current number now is this, the dollar value that is plugged in by Federal Reserve, and the connotation with the S&P itself, right, is 0.92. What does it mean? That means that, right, every dollar that the market is now every dollar that the Federal Reserve put in itself, right, there's a 0.92 of equivalent to stock market. That means that, right, if the Federal Reserve had pumped in, let's say, $3 trillion, example, that means that almost $2.9 trillion of value is inside the stock market. So it's almost directly, how much they pump in, right, it did not go to the economy, but it went to the stock market instead. So that means that, right, for traders itself now, if there's any chance of the Federal Reserve do QT, quantitative tightening, right, that will actually bring down the entire market. So now with the put and call options at 0.89, right, I just feel that we should be very careful right now. And of course, the market volatility itself, right, is above the moving average. And again, itself, the moving average tells you that the market is getting volatile. And this is actually a sign that a lot of people are now very mixed bag. And of course, the safe haven demand in terms of the difference in 20-day stock and bond returns, we're back to zero level. That is not comforting. And last but not least, there's a very strong increment on the junk bond demands. Now, that means that players are either losing their marbles, or they think that, right, it's rather to go and play whatever that give them high return first, because playing the stock market doesn't make sense. All right. So all these things tells me that that's the reason why the fear and greed index itself is not really corresponding to the current market situation right now. Okay. So once again, you do not have people doing this for you. I'm pretty sure they may tell you the fear and greed index, where is it right now for overbought or oversold, but to explain in such a great detail itself, right, I don't think so, like, in my opinion. Okay, I can be wrong, but I just think that, right, probably it's right. You may not find another guy going to do this for you guys. Okay, so that's something I want to feel that, right, I feel thankful that you guys have listened to me all this time and been supporting my this channel all the way. Okay, all right, moment. Now, we all know that, right, yesterday we have a shock. Wow, yesterday the consumer confidence was 103.2. Oh my goodness. I mean, definitely I never expected that. I was actually looking at the lower number at 96 to 95. So when I saw the number was 103, I was shocked. Now you can see that, right, the number have been down all the way since months ago. Now the last few times itself, right, was like 98, 95, you see. So I never even expect a 93.2. The last time was 103.2 was back in June period. So the question is this, is it because everybody is getting more excited now? Well, yes and no. Good is because the stock market is recovering in the month of June and July. That's why the consumer confidence is there. Number two is because we have the so-called the energy prices coming down a little bit. So that probably increased the consumer confidence. But we all know now the stock market is coming down a bit, and plus the energy prices still maintaining there. I don't think the next one will be good. But whatever it is today, we have the ADP number. Now, ADP number, the market is looking at 200,000 jobs today, and I think that the market will get what they want. Okay, so what will happen? Nothing. Why? Because already Federal Reserve has said, right, even though that if there's going to be a high increment in terms of employment, and that is actually giving the Federal Reserve the reason to continue to rate hike, because they really need to bring down the activity in the economy. When economy activities goes down, right, then inflation will subtly goes down. So if the ADP numbers is high number, right, it may be positive for one side, but it will be negative for the longer term. So that's why I said that today will be a very in my opinion, there'll be not much going to help on this. Now, initial jobless claim itself is moving up steadily, and that's one of the concerns why I felt that the Federal Reserve realized that this is actually not doing well. And of course, the non-farm payroll will be looking at 300,000 jobs. The last time was 528, but we all know that that number itself is kind of crappy. So 300,000 jobs should be more or less the same thing. Now, I won't be doing MAO on Friday. I won't be doing that. already said that earlier itself, right? Thursday and Friday, I'm going to take a short break to prepare myself for next week. So there'll be no MAO on this coming Friday, okay? So don't be worried. How come the YouTube channel is not updating? Because I will be holding this back for a moment until next week itself, okay? Got it? All right, so that is what we have over here in terms of the economic news. Right, let's look at what happened overnight. Now, the stock market extended their losing streak to the third day in a row. Dow Jones down by another 300 points. So what is happening right now is that everybody now realize that they know that now there's no chance, in fact, that the Federal Reserve is going to lower or stop their hiking. In fact, there will be more hikes coming in. And there will be a very little chance of a 2023 rate cuts. And because of that, right, everybody realized that they should consider to book some profit. And that's the reason why we can see the market down 3% last week. And of course, further down, we have more downside in the last few days. And the thing is the short-term yields continue to go higher. Now, this is not a welcoming sign. Let me bring to you the chart right now. Okay, let's bring it to you right now, the 2-year yield, the US 2. This is the bonds one. Okay, here we go. Now you can see that, right? This is the US 2-year yield. Oh my God, look at it. Oh, this is really, really crazy. Now, just earlier this year, the 2-year yield was doing at 0.6%, okay? Now, within less than 8 months, now we are at 3.5%. Oh my God. Just 8 months, we are looking at the 2-year yield from 0.6% all the way to 3.5%. And this is likely to go higher. There's a very high chance that it will be going to 4%. So this is where I'm trying to explain to you. This is actually telling you that a lot of traders now, they rather going to put the money with bonds market to buy in the stock market. Because if this is going to be continuing this value, now it's quite a good bidder. Imagine that if you put in money for 2 years and get 4% return, why not, right? So it's much better. That's the reason why you see that recently itself, right, the local bank in Singapore is also expecting the so-called the long-term fixed return to be much higher, right? This is what's actually happening right now. So is it a good sign or bad sign? I think this is very clear that you know where we're heading, and this is something that we cannot lie for it. Okay. All right, so let's look at some local and global news right now. It's going to be a quick one. Now, of course, in Singapore, we have a pretty incredible news. Okay, just need to talk about it. I'm not against it, but it's just that, wow, okay, never expected it. Okay, so our Joseph Schooling was caught for cannabis consumption. Oh my God. And this is really a shocker to all Singaporeans. We all know that this is a golden boy, the poster boy for a lot of people. So this time around, oh gosh. Now, seriously, this is not good. Yeah, of course, it's not good. So I hope that he will learn this lesson and rebound stronger. As you know, as long as you come up with some result, right, people can still forgive you. Yeah. So your friends of Joseph Schooling, just give him a pat on his back and say that, you know what, what's done is done. You cannot change it, but you can definitely better it. All right. Now, UK inflation has topped 22%. Oh my God. Now, in US itself, right, okay, it's already at 8.5%, and they're really shaking now. UK inflation could really hit 22.4% if, let's say, the energy prices continue its upward spiral. So where are we right now? Just to be fair, okay, at the moment now, I don't have the date. We are now at, where are we? Let's see. Okay, so now we are already at 14.8. So they're looking at even higher number at what, 22.4, okay. Now, 14.8 is really high. It's higher than US, but and that's the point here. So if this will continue, right, this is going to be very, very taxing to everybody itself. Now, Bank of Korea wants more market volatility as Federal signal more rate hike. So apparently now we have the Bank of Korea coming in BOK, telling people that no, this is going to be bad. Okay. And last but not least, interesting, Warren Buffett, Berkshire Hathaway, all right, sells 1.3 million of BYD. That is interesting. The thing is that why will he sell now? We all know that when Warren Buffett sells some shares, right, it's not going to stop there. It will sell more as it goes down. Yeah. So what is that reason? We are not too sure. There's no comment or response, but this is something not very good because for a company like this, Warren, to do that itself, probably he knows that the production or the numbers or the chips are not able to equal to the current investment of his. So probably that's the reason why. Okay, I can't be sure, but I know that he has made some good money from here. And all I can say is that, right, traders just have to be careful. Okay, so that are all the news for today. It's not going to be a quick one. Let's go into the alternate market news. Now, really, let me ask you guys, do y'all really enjoy the alternate market news? If you enjoy the alternate market news, can you enjoy? Wow, thank you very much. Thank you, Stephen. Thank you, Nicholas. Thank you, Jerry. Thank you, Daniel. Thank you, Leslie. Thank you, Allison. Thank you, Payne. Thank you, Ding. Thank you, Susan. Thank you, Alice, Angeline. Thank you, Jude. Right. Thank you guys for all that thing. It's all right. Now, alternate market news, right? Some people comment to me when I'm having my meals with them. They say, Kel, your alternate market news are actually pretty good. Okay, but it's just that because so many people don't look at these factors here, it becomes very difficult for people to digest or even accept. So that's why people say, Kel, if you take the easier route, right, by not talking about this alternate market news, then of course it'll be better. Okay, I kind of understand where it's coming from. It's a very good friend of mine, and he says that we can relate what I'm trying to say. Because not everybody like to hear things that is not available or commonly available or conveniently available. But to me itself, right, this information does give you a what they call a futuristic view of what might be happening or might happen in the time to come. So that's the reason why I will take a lot of time to read a lot of news, check through a lot of YouTubers, and then after that get the best essence of it right now. So that's why MAO itself, right, you notice that initially MAO was supposed to be in the morning at 8 to 9 a.m. But I realized there's so much information shared with you, and I don't do 2 sessions. So that is the real reason why. So of course, with that itself, right, that gave me a concerning factor here. So now I understand why itself that is important. Okay, I'm happy that you guys actually liked it. Thank you very much for this. Yep. Okay, so let's just really go down to our last time doing this on the alternate market news on Facebook Live. Okay. So first of all, this is what happened here. Apparently, we all know that Kashkari is one of the very handsome this Fed officials. Now he is saying that he's very happy that Chairman Powell during the Jackson Hole speech was received. He felt that, right, from Jerome Powell, what he said means that now people should now understand the seriousness of our commitment to get inflation back to 2%. Now, seriously, how do we do that? See, again, I repeat myself. I know I've done this before. I'm going to do this one more time, guys. The current inflation number as of what they call the official number, the inflation now is at basically at 8.5%. The current interest rate now is 2.75%. Okay? Now, if we want to move this guy down to 2%, according to what is mentioned here, then seriously, it has to have the interest rates going upwards so that it will cut and bring down the entire inflation. So how can we do that? Well, basically, it's all right to drive back down inflation, mathematically speaking, with a drive interest rate upwards. So the number that I felt will be at least 5%. To me, that at least the interest rate must hit 5%, then we can get the middle mark. And if that is to happen, maybe inflation will drop back to 5%, to 4%, to 3%. I mean, interest rate has to go up to 5% first, then we have the inflation pulling back down to 5% or 4%, something along that way. So guys, let me ask you guys now in your own perspective, okay? If let's say the Federal Reserve really need to bring back this whole inflation back down to 2%, in your opinion, how much do you think the Federal Reserve has to increase the interest rate to so that the inflation can drop back to 2%? Now, everybody, there are 78 of you right now online. I need to see at least 15 of you guys coming on and write that number. What do you think that the Federal Reserve, the number that the Federal Reserve must increase the interest rate to so that the inflation in US can come back down to 2%? Please key your number right now. Just for the fun of it, just key in. I want to see what is the feel of you guys right now, okay? Okay, there's some numbers coming in already. Right, Steven say 6%. Wow, okay. Hao Yang say 5%. Allison say 4%. Wow, Anthony, 10.5%. Okay, cool. Eugene says 4.5%. Dennis 4.5 to 5%. Jude says 6%. Jerry 8%. Angeline 7%. Leslie 5%, Daniel 9%, Ping 6.5%, and Johnny at least 5 to 6%. Yeah, okay. Thank you guys, about 15 of you. So accurate. Now, my view is this. My view is 5%. I think that we need at least 5%. Yep. Right. We need it to do that so that the numbers will come down slowly. I repeat, we need to have a lot of unemployment. I repeat, we need to have a lot of unemployment. We need to have the interest rate to be at 5% so that everything becomes more expensive, really, and then that will bring down inflation. Do you understand where I'm coming from? I give an example, okay? Inflation comes because there's a demand for certain products, okay? So as long as the demand is there and the supply is lesser, then what will happen? The balancing beam will structure in a way whereby the price will go up naturally. All right. So how you understand my point now? Okay. So I give you a best example that says like bird nest. I say like shark fins. Now shark fin prices is expensive because the supply is kind of limited and the demand is high. So if let's say now, right? Okay, we increase the supply. No, in fact we cut away the demand. If there's no way to increase the supply, we cut away the demand. And we basically what happened? We mix away, right? We bring this thing all the way up. So one bowl of shark fin may cost at $50 per bowl. Now it's at $200 example. Then the demand will stop. And when demand will stop the sell, right? Then naturally there will be lesser people asking for it to sell, right? The supply will slowly overwhelm the demand, and that will bring down inflation. You understand my point? That will bring down. So which means that, yes, indeed, a lot of pain has to be established. A lot of pain has to be introduced. A lot of people must lose their jobs. Yes, I know by saying this is all right. See, again, people don't like to hear this. They say that, come on, man, is there no other way out? No, there's no other way out. A lot of business must fail. A lot of business must fail. A lot of business must pull back in terms of staff. A lot of business must turn to fully automation so that the market can actually come down in terms of inflation. So I know by saying all this is all right, I know that it's not going to make you guys happy, but this is the truth of the matter. Okay? So who is this guy again? Kaskari. Let's take a look. This guy. Hey, nice, right? I like him. Right. I mean, seriously, it's all right. I like his deep eye set and eyebrow so thick. Now, this guy, Kaskari, is an American banker, economist, and politician who is the president of the Federal Reserve of Minneapolis. All right, this guy is all right. When I see his face, the first thing that comes to my mind, which actor is that? Which actor comes to your mind the moment you see this guy's face? Which guy? Who do you think? Who do you think that this guy looks like? Okay, now he's only born in 1993, right? Right, 6 years my senior. All right, this guy is all right. Have been very vocal. He's been very hawkish all the way, has not stopped being there. Of course, in between itself, he had a flip-flop view a bit here and there, but overall, he's been very hawkish. Mr. Bean. Okay, no lah. I don't think he looks like Mr. Bean. I think he looks a bit better than Mr. Bean. The moment I saw him on the TV and on the thing itself, right? Straight away itself, right? I see him and I know, I felt that, you know, it's straight away the actor name, the actor itself, the actors, what he casted in the movie, straight away come to my mind. Okay, we have Andy Garfield, we have you, Brianna. Okay, let's just take a look. My view. Okay, this is who I think so. Okay, I say it's a joke here, so but indeed, the first person that came to my mind was him. It was Arnold Vosloo. Okay, Vosloo. All right. Okay, this guy itself is an actor of the Mummy. Yeah, remember he was an Emote, the guy. All right. Don't you feel that it's really look alike? Do you think so? I think the similarity itself is at least 85%, right? Okay, so maybe he's the one going to make things happen, okay? Really to make things happen as well. Because now we go to something more serious, okay? Now, Federal Reserve supposed to do the QT for the longest of time, but they did not do that, okay? So now the thing is this, according to Bloomberg now, Federal Reserve QT to hit full strike with the central bank shrinking the 9 trillion portfolio, okay? And we all know that they're supposed to do in June and July. Nope, nothing much done. All right, so now August done a little bit, okay? So now the thing is this, we are expecting, okay? Expecting September and October will be the largest decline for bill holding. This is very serious, guys. This is very serious. This is something that you cannot lie about it because it's on paper. So apparently it's right in the coming September and October month, it's all right. That will be the largest decline on bill holdings. And when that actually happens, that will basically set up some money from the system. And that is the reason why I felt that, right, this coming September and October month will be pretty scary. So we can see right now the impact of the stock market. So the thing is this, you can see that this is a Federal Reserve balance sheet as of April. We're still at a high level. Now, the last few months, the numbers have been going down very slowly, all right? But still, the market did come down by at least 2,000 points. So if that's the case, like this, guys, if this range itself is equivalent for the Dow to lose 2,000 points, if it goes down by a little bit more like this, the sort of speed, right, we should see at least another 2,000 point to 3,000 point drop from the US Dow Jones, okay? So that is why I felt that, right, this make more sense, okay? So this is something that we know and it's coming. Of course, it wouldn't be like immediate impact, but it will slowly hit us. So now you understand why am I so bearish with the next few months, because I felt that, right, things will get pretty ugly. And this is not the end yet, there's more to go. All right, now rally hopes have crumbled since the Powell have started to talk about this rates hike coming in as true. And of course, now Saxo Bank has came in and said that they also have the change of view. And of course, treasury stocks, right? This emerging markets itself, right? All of these are all coming down. All right, all are coming down. And of course, Goldman Sachs says that it's time to buy commodities, worry about recession later. Now, why commodities? There's a good reason for that. Because now, right, Europe is facing one of the worst terrible winter for the next 5 to 10 years without a gas price cap. Because gas price is going up very fast and we're going to hit winter period very soon. Yes, indeed, times go very fast. So if this is going to happen, right, that will create a lot of problem in the market. And that's why I kind of believe that why this Warren Buffett, right, dumping BYD and buying into OXY. This is why I felt that. And of course, right, apparently now in Europe itself, right, the cows and pigs, people are buying meat in bulk to save money, right? These are all the recent data, and this from Bloomberg. All right, the grocery itself, right, is increasing and it's time to buy a lot. So people feel that, right, to buy in pieces is more expensive. They might as well buy the whole hog, store it, at least they have meat for some time. So of course it makes sense, but of course the freshness and the taste will be a bit different. But when money is a concern itself, right, taste can be added, right? Condiments can be making better, or maybe some cooking itself, maybe can help it out. But my point is this is bad for Europe, and I've been very bearish on Europe right now. And of course, Blackstone, one of the big hedge fund of the world, they have decided to stop home purchases in 38 cities. That means that now, right, rather than buying, why? Because home prices is coming down in the US, right? The home prices has fell for the first time in 3 years last month. And this is the biggest decline since 2011. So the last 12 years, this is the first time we have a decline so bad that it's not seen since 2011. So what is happening right now? Things is getting crazy. Things are getting bad. And of course, in Singapore, we can feel it, but we can't see it. And that's the reason why a lot of people still think that the market is still pretty okay. Now, I'm not going to debate on this because when things happen, it's all right. It's very difficult to tell people bad stuff when things are really ongoing. It's very difficult, all right? It's going to be very, very difficult. So all I can say is this: as long as you understand that things are still, it's not going to go well, we just have to be very, very, very careful, okay? Just need to be very, very careful right now. All right. So you can see now the housing affordability is at the lowest level in 30 years. That means that people are not able to really afford for their housing right now. Because now the current price has took up at least 32.7% of the median household income to purchase an average home using a 20% down payment on a 30 years mortgage. Oh my God, this is all data from Black Knight. This is about a 13 percentage point higher than entering during the pandemic, and of course, much higher than the national average. The national average itself is 23.5%. Oh my God. So if lesser people are not able to pay for their houses or their mortgages is more and more expensive and interest rate is rising at the same time, I'm so sorry. If you will have some money in the stock market and you are not able to pay off your mortgage payment, your loans and stuff like that, I'm so sorry. It's very easy for anybody to just consider to just cut away their stock portfolio or their involvement in Bitcoin or NFTs and just bring the money back home and make sure they have a roof over them. This is something that we all can see it happening. If you recall what happened back in 08, 09, is exactly the same thing. Nothing have changed at all. Okay? So the thing is this, even if some people say that maybe it's just only the big cities, no. We have San Jose, California, Seattle, San Francisco, San Diego, Los Angeles, and Denver. All of them are down at a very, very bad prices as well, right? So the thing is this is actually pretty bad because why? When the housing prices are going down itself, right? That means the mortgage itself, the costing will increase. That means that the banks will get very frightened. They'll ask you, hey, you know what? The house that you bought here itself from this price is going to the other price now. So what does it mean? That means that, right, you have to pay more. Yes, I went through this before with my family. I know that. We bought the price at a very high price, and the banks, when the interest rate has to go higher and the prices of the property goes lower, that is where the banks will come after you and ask you to pay more money. And if you can't pay, they will foreclosure your house. This is something that we are going to see right now. We have seen this we didn't see it for the last 14 years, and it's now repeating right in front of us. So it's just a matter of time that this is going to repeat once again. So of course, you can do a very simple mortgage calculation, okay? So if you do a 30 years loan and you pay at 2.65% at 30 years, your month for $400,000 worth mortgage, so-called, you actually need to pay about $1,612 per month. But if you actually have the interest rate go to 6%, oh my God, the bump up itself is about $2,398. So which means that you need to pay at least another $800 out of nowhere. So this is why I say it's very scary. And if the number keep on increasing, there'll be a lot of problem coming in, and we're going to see the same thing repeating. And now you understand why itself Federal Reserve really need to increase on it itself, pedal to the metal, to make sure that the inflation get come down fast. Because if not itself, right, people start to suffer, or that is where things will get very, very ugly. All right, so now you can see right now, this is the government bonds, a 10-year yield. Now, I've been telling you this, the 10-year yield is at 2.6%, is a very, very strong base. And you can see that the moving average broke since early 2022. And that was where I was so bullish with the 10-year yield. I told you it will go up to 3%. And now I expect this to hit past 4.5%. Okay, so for me, it's all right. I believe that the 10-year yield is going to go all the way up to 4.5% in the coming months. All right. I know by saying this itself, is absolutely crazy and absurd, because if that really happened, the stock market is going to get hit. Why do I say that? So let me bring the chart for you, and you can actually do a direct comparison right now. Now, this is the, you can see right now, the one in the candlestick is the 10-year yield, right? This is the 10-year yield, okay? Now, the one in the orange is the S&P 500. So you can see very clear, when the 10-year yield was moving upwards, the S&P 500 actually came off. So when the yield was coming downwards, the S&P 500 was actually going up. So it's a pretty clear thing here that, right, if we do expect the 10-year yield to go higher, then what will happen to the S&P 500? I think this is pretty clear. You don't need to be a guru or a chartist or an expert to know that what will likely be happening, okay? So now I understand why I'm kind of worried, because I strongly believe that there will be potential further downside on the S&P 500 regarding with what we are seeing right now, okay, from where you can see, okay, over here. So, okay, all right. So if you look at it right now, right, there's another market I'm very concerned, and that's a Bitcoin market. Now, the Bitcoin market has a very close relationship with the stock market. Now, I've been saying this for the longest of time. I say that if you really want to know how the stock market will behave, you just need to concentrate and watch the Bitcoin market, right? How many of you actually agree this? Okay, how many of you actually agree? How many of you actually agrees that the BTC market can forecast the S&P? All right. How many of you actually agree that the Bitcoin market itself, right, has a very incredible way to predict the market, the stock market? Right. If you agree, can you put agree right now in the thing? If you agree on that. Right. Steven straight away say he agrees. How about the rest? What do you think? Do you agree on that itself? Okay, it seems that only this okay, we have three more now. More people agree now. Okay, Susan, Allison, Stephen, Anthony, all of y'all agree. Yeah, Dennis also seem to agree. Okay, all right. Oh, so Karine say it's even better with the Nasdaq. Yes, of course, it's even better than the Nasdaq. Yep. Okay. So Jerry, Pink, this Anthony, Susan, Allison, Stephen, all of y'all agree, right? Okay. So the thing is this, remember on the 21st of July, I share with you guys, I say that, look, why don't you consider to get out of the market? Because I tell you the S&P 500 might fall. Rationale is because the BTC market is at 24,000, and I think that it will go down. And I said that it will go down by at least 10 to 20%. All right, 10 to 20%. Okay, and then I say that be careful on the month of August. Now, the day was 21st of July when I was saying this as well. All right, so let's take a look at the market right now and what happened, guys. Take a look. Now, there's something that I spotted recently. That was 2 days ago. FBI, yes, this is very interesting. FBI actually this US entity, all right, FBI actually warns that the cyber criminals are increasingly exploiting the vulnerability in the decentralized finance platform to steal investors' cryptocurrency. If you think that you're a victim of this, please contact the local FBI field and then blah, blah, blah. Oh God. Now, why would FBI comes into the picture? Why do you think? Why do you think that the FBI comes into the picture of cryptocurrency? So give a guess. Right, I want to see you guys whether you can guess it. All right, why would FBI come into this itself? Now, we all know that this BTC itself, right, is created by so-called this person, Satoshi Nakamoto. All right, we all know that this is a name used by the presumed persona of the person who developed the Bitcoin. So, of course, we couldn't really find who is a real person behind it. Of course, this guy said that he is the guy, but we all know that he is not. Yeah, anyway, my point is this, okay, I don't think so, because I think that this is something more than beyond. But why do you think that FBI want to get involved with the cryptocurrency space, especially Bitcoin? What's the relationship between them? Anyone want to try it out? and tell me what do you think is the relationship. Oh, their relationship is definitely very, very direct, very direct. But it's just that, wow, okay. All right, anybody want to share with me? Okay, seems that until no one actually come back with this. Okay, so still no answers. Okay, let me tell you now. What is the thing between the FBI and Bitcoin? Apparently, the top 10 list of people holding Bitcoin, we have a few of them itself, right? Some of you may notice the name, but the one that at the 10th place, oh my God, is actually FBI. Oh my God. 美国政府. All right. Oh my God. FBI. So FBI actually have Bitcoin and they have 174,000. All right. 174,000. All right. But of course, the latest update said that they sold at 30,000 and now about 144,000. Okay. Ah, interesting. Okay. Now, so the question is this: if FBI is holding this itself, right? Okay, holding this itself, then would Bitcoin eventually go to zero? I don't think so. Yeah, I really don't think so. Tax evasion, possible. Yeah. Okay. So apparently it's all right. This is the updated list of all the whales, ultimate whales of Bitcoin. Okay, the ultimate whales. All right. So this is what I found. Okay, that right. If ever Bitcoin is to go down drastically, all right, because of whatever reason, because if we know that the stock market is going to go down, right, likelihood the cryptocurrency, especially Bitcoin, will also be coming down. But once it go down to a certain good level, right, I think that you should really, really consider to buy and hold Bitcoin for the longest of time. So I'm going to write it down because today is the last session for on Facebook, right? I'm going to tell you this. Okay. Now, currently, Bitcoin is at 20,000. Now, today is like 31st of August, right? 08, 22. Okay. So my forecast is that it may drop all the way to 16,000 by mid-October 2022. Okay. Now, of course, it may go even lower to I don't know where, but any price between 12,000 to 15,000. All right, any price between 12,000 to 15,000. I think this is a good buy. And my target is I expect to go up all the way to probably 70,000. All right, now when would that be? Maybe in 2024. Can you understand? Okay, so what I'm trying to say is this, that in my opinion itself, right, if Bitcoin is to come down all the way to 12,000 level, well, that would be a very good time to buy some Bitcoin and just hold it there. And then after that, let it run slowly all the way to maybe 70,000 in about 2 years' time. Yes, about 2 years' time, if you ever go back to 70,000, then that return is going to be very favorable because that will be more than 4 or 5 times, all right? 4 or 5 times. And I think that will be a very good time to harvest around there. Now, 100,000, I don't know. Maybe when the market is going crazy and again, the whole thing fiasco coming in, the irrational or buying comes in, all this is all possible, but I'm just sharing you the view on this thing. So what if, let's say now the Bitcoin goes down, then what will happen then? Okay, then let's take cross-check with this as well. Okay, FICO, I know that you're still aiming at 10,000, yeah, I know that. Okay, so everybody take a look right now. This is the one in candlestick is the S&P 500, okay? The one in blue is the BTC. Okay, so now everybody take a look right now. Okay, this is really quite scary though. When the BTC actually hit a bottom and goes up, right? You notice that the S&P 500 also went up. And very incredible, when the BTC is coming down, the S&P 500 also come down. And the best part is that the core relationship is almost the same. You understand my point? It's almost the same. Okay? So now we have a problem, guys. Now we are actually having a problem because, you see, no matter how far they are, right, eventually they'll meet up together to, come together. Almost every time they come back together. So now where we are, the S&P 500 now is basically at 4,000. Okay, but the Bitcoin now is at basically this price at 19,000 to 20,000. and we have a distance between them. And based on the last time we see the correlationship with the Bitcoin and the S&P 500, it would seem that the S&P 500 will eventually meet the Bitcoin or vice versa. So in short itself, either going to see Bitcoin going back to this point right now, right, to 32,500. That means that Bitcoin is to go back to 32,500, or S&P come back down to meet Bitcoin at this point. So do you see my point now? All right, there seems to be a very, very incredible correlationship between the BTC and the Bitcoin. All right, BTC and S&P 500. So this two itself, right, has a very close relationship together, in my opinion. So that's the reason why I felt that, right, based on judgment of this, it's pretty clear that S&P 500 may really hit 3,400 if, let's say, the Bitcoin pressure it down low enough, and that might bring the S&P all the way down to 3,400 level. Can you understand this? All right, so that is my view over here. So of course, again, whether or not this will happen, let the market decide. But of course, if you'd ask me, I think that we have a lot more room to go, really. Yep. So this is a price, biggest price differential at the moment right now. And of course, this is my personal chart. Now you can see on my personal chart here, this is point A, this is point B, and this is point C. And of course, on the lowest point here from X all the way to C, it hits beautifully the 61.8 Fibonacci number. Now we all know that once you hit the 61.8 Fibonacci number, the next number it will go will be the 50% mark, which the market went. And if we continue to go down, we go to the next one, is 38.2, which the market went. And the last number now will be the 33.6, and that's 31,402, which is very near to the 80% mark, 85% mark of 31,411. Suspect it will hang around here for a while. It may even rebound a little bit, but once the things start again, then this time around it's going to go down here. So, okay, so that is how I see the chart. And of course, I say it's very, it's going to be real that, right, if you guys have friends who are involved in Bitcoin, they may not be in the best situation right now. They may get very frustrated. They may think the market's going to go up, go down further and stuff like that. Yep. Okay, so that is my view on how I see in terms of the Dow Jones versus the Bitcoin market. Okay. On, yeah. Okay. All right. So let's continue. All right. Now this is the S&P 500. The S&P 500 chart is a little bit much clearer. You notice that S&P 500 really recovered from the bottom, X recover all to Y. But the thing is that the market did not cross the 61.8 for the S&P 500. It did not cross. And we are now around this area itself. And you can see the terms of the A, B, C projection is beautiful, almost precise. So again, same thing now at 23.6 is 39.15 level. If the S&P 500, right, breaks below 39.15, there's a very, very good chance the market will see a new low all the way. And of course, that will bring in the next number, which I'll share with you all the next time. But of course, at the moment now, 39.15 will be the key support level. And we see how much or how long the market will take to hold around this area here itself. Okay. All right, so that will be all for the alternate market news. I think that's pretty clear. I'm ready to tell you this. If the BTC market is coming down, most likely the stock market will come down. If the BTC market is recovering, then of course you can see the stock market recovering. And it's something that we can see beforehand because the BTC market itself usually move ahead of time. And of course, and if you trade on Saturday, Sunday, you can even feel what they expect to happen. All right. So, but again, please make sure you put your stop loss in place and do a risk management. Yep. Okay, let's look at the charts right now. Okay, so first of all, the stock market on the what do you call the China market. As I tell you, right, the China market is heavily resisted by the moving average MA30. You know, as long as the market stays below the MA30, there's a very, very good chance that the market is still going to go down. I know that I've been saying this for the longest of time. The market has been trading down very slowly, but it's definitely moving and aging towards there. So my view is this. that as long as the market cannot stay above the MA30, that means that this counter is going to go down lower to about 13,280 range. Okay. Now the current level now is 13,500 level. So there's still a distance to here itself. So traders, you can consider to watch your trade and see what you can do with the China A50 market. Okay. All right, so with China market out of the picture, let's look at the US market right now. Okay, the US market. Now today, the US market is pretty clear. Let me explain this to you slowly. Now, first of all, the opening price of today is at 31,788. This is the OP of the day, all right? Now, the OP of the day, where's MLP? The MLP is right here, everybody. It's 31,982. So MLP is already on top of me. So by right, if the market stays below OP, it will be a sell. But if the market goes above OP but below MLP, you shouldn't be doing anything much. But don't forget, today pivot 1 is here. Pivot 1 itself is at 31,733. So which means that as long as the market stays above OP and above pivot 1, you can be a buyer. CCRY, you can be a buyer. The only thing to concern for is the KSI. The KSI is red in color, meaning right the market upside potential is not as strong, so you can actually do small trades. Okay, so as long as the market stays above MLP today, if it goes past 31,982, it can go even higher. Okay, how high can it go? Well, it is possible that the market can come back to here, which is the BMB level, and that's 32,378. Wow, that's pretty high, right? But it's all possible. Okay. All right. So if the market is a touch an MLP and come down, right, be careful. If it breaks below MLP and break below OP, then there will be some selling to come. Okay. There will be some selling to come. Okay. So watch out for this. All right. Now there's a stack between the MA30 and MA200. So it's upstairs on the bone. I don't think the market is going to go there. So more of the downside one. Okay. So watch out for that. Now, the NASDAQ today has broke above the MLP already, all right? So it's above OP, above MLP, above pivot 1. So all these are buying signal, although the KSI is red in color, right? But it's still now for buying, okay? So as long as the market stays above OP, that is fine. But if the market stays below OP, then of course it will create a bit of a problem for all of us, okay? Now, 12,251 is the pivot 1 level, okay? All right, okay? 12,251, yeah, it's a pivot 1 level. Okay, Susan say already hit MLP. Huh? Okay, let me just double check. I can't see here. Thank you, Susan, for updating us. Okay, so let's bring the Dow again. Oh, yes, indeed. Yeah, the market hit the market hit MLP already. Oh, okay, here we go. This is the intraday chart. So intraday chart, this is where you buy. This is where you buy. CCRY above OP. Above pivot 1, CCRY you buy, and of course you target your profit. And of course the market hit MLP perfectly, stop here with a star. So that tells you that the market might be able to help you back later. Okay, so there's something to take note of that. The KSI has been green, that means the boys at the start of the day have been buying non-stop. Okay, all right, so that is something to take note of, yeah. Okay, all right. S&P 500, okay, already there. Also doing the same thing, above OP, above MLP right now, okay? So it's a buy, but KSI is red, so that means I take some profit along the way. Now, as long as the market stays above MLP and above 39,750, right, the market should be okay. But if the market goes up itself, right, then of course you can actually look forward to it to hit around this point here, and that is 40.71. 40.71. Okay, got it? Okay, yeah. So that means that trading wise, right, according to the rules, is more for buying, but the KSI is red, so that means that you take profit periodically as the market climbs up. Okay, that should be the way to trade in the market. All right, let's look at Nikkei right now. Now, Nikkei has a doji directional day set up today. Now, doji directional day means that the market, if it stays below OP, the market will naturally close near the low. But if the market close above, trade above the opening price, then most likely you close near the high. So at the moment now, right, we have a bit in between. The market initially was below pivot 2 and below OP, right? So that's why it went down first. But after that itself, right, not too sure what's the draw here. So what happened? The market rebounded, crossed MLP, crossed pivot 2, and now it's actually trading above here. All right, so what I try to say, okay, as long as the market stays above pivot 2, everything is good. But if the market later on pull back below pivot 2, traders will be in trouble, because that means that, right, it's coming in on this official. So if the market actually breaks below MLP and goes below 27,988, that means there's a very high chance the market might be going down further. Now, the thing is this, how low will it go then? Well, a few KCB right here, you can go ahead, you can order from here as well. All right, so you can try to take orders on this. Now, S&P, the Nikkei 27,730 is still my target. Nothing has changed my target. 27,730 is still my target. Okay, all right, that is for the Nikkei. And how about the Hang Seng? The Hang Seng did a very strong rally today. Well, Hang Seng basically opens here. Then it went down first, but it was not enough to go down much, all right, and it rebounded. So when it rebounded itself, right, above OP, above pivot 1, no matter how, it's a buy. And of course, if the market can break above MLP, it'll be even a better one. So let's take a look on the chart itself. Okay, here's more of 5 minutes for him. Okay, so what you can see is that this is now it moved today. The market was above OP already. So once the market goes above OP, above pivot 1, CCRY, buy. Wow. So immediately, it's all right. This thing really shoot up because it was above OP, above MLP, and above pivot 1. It's a very, very strong move result, and the market really shoot up. So will this happen in the rest of the world market, right? I don't have data. It's going to be difficult, all right? So let me find the data first, then I can do it for you. But of course, you use the normal conventional chart, and if you think that, right, this actually tells you why the market is going up itself, right? Because of this thing here, the timeline, then just ask the people there and see whether they can let you come in. Yep. Okay. So DAX. Now, DAX, I already tell you guys that DAX might be coming down, but instead DAX yesterday gap up and trade higher. So my bet, okay? So for DAX yesterday, it gap up first, and then it went out even higher. Now, why it went higher? Because it thought that the residue will be around here, but it's not. It's actually much, much higher, right? So the thing is this for DAX, right? For today, the MLP should be around the same area. DAX, just now we say already is green. So now if DAX wait for the pivot 1 to open, then we can talk about the DAX. But the KSI is red and it's uptick red, right? So that means the chance of need to rewrite is there. So, okay, the market may have to wait for a while. Okay. Oil. Now, oil, I thought is on the way going up already. Yesterday, oil hit $96.50, but after that, it do a super BMB. A super BMB, meaning, right, the two colors come together. So now what we have is a very gigantic BMB right here. Okay, so the problem is this, okay? The actual price at the moment right now, right, we're going at 104.20. Okay, very familiar number, right? 104.20 is like the, the height. Okay, I think it must go. All right, in terms of BMB, so the downside can be drastic. It's $83.40. Okay, so now the thing is this: where do you think that oil will be going? Now, oil I thought was going up on the way up already, but it pulled back all the way down. So now oil is staying around this area here. So of course, by right, the more meat itself is go all the way to 104.20. But of course, to get things done itself will be 83.40. Okay. So what do you think, guys? What do you think? Where you think that this crude oil will be going? Now, if crude oil really goes up, right, then we have a problem. Let me explain to you the problem, yeah? Okay, so you see the chart over here. This is the month of July period, okay? July period. Now, you take the highest point, the lowest point, okay? All right, you can see that the market valuation is from 105 all the way drop to All right, so that means the rating range itself is between here to there. So the average price itself, you can see the average tone is about $99. Okay, so after so many rate hikes itself, that they only managed to bring the crude oil down to $99. Okay, so the question is this: will they be implementing a $99 here also? I think they will, right? So if that is the case, so you can ask them about the fridge rate itself. Okay, over here and see how it goes for the crude oil. Okay, but the crude oil KSI is all the way green, huh? So there's a lot of buying interest at the moment right now. Okay, now look at gold. Now gold, I'm still very bearish on gold. I'm still very bearish on gold because I suspect the dollar will go down, go up higher. So the thing is this, today the gold price is now below MLP, okay, below pivot 1 and 2. So that means that if you go down, it will, okay. So then the first KCB will be 1716, which is very, very near. The next one itself, right, will be all the way to 1695. Now I say already the pivot 2 is 1711.557. So if let's say the market really want to pull back down, then you can compare all the way to here. But if they say that no, it should be halfway mark, then of course it's a different thing. Okay, so watch out for this. This is going to be a problem for all of us. Take note of that. Okay, so gold price, I believe that 1716 will be traded first this today, because the KSI is all the way red and my friends are not buying anymore. So in the KSI, the KRW is green. So that's why the downside pressure should be high. Okay, so let's look at silver right now. Now silver is the same thing. Silver has went up all the way. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 days are upside. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 days on the downside. So that really is something that is not very, this doesn't make sense, right? Two coincidence really, right? Okay. All right, so how do we do silver? Well, silver has to go down lower. I show a band. A bit lower to maybe, if I really correct, maybe we can go down to maybe down to, to this, not to say in this expensive stuff, we can say those places that is comfortable. And of course, this is something here. If silver to drop right, I believe $18.10 will be the first target. That is the pivot 2 level. Okay, so if I think that the silver is going to drop right, because KSI is red in color, blue bars are everywhere, I think that there will be more downside room. Okay, there will be more downside room to go. Now, someone just asked me about the Dow Jones itself, right? How high can the Dow Jones go? Now, I don't know how high can the Dow Jones go, but I can show you numbers that you can take and consider. Is that now the Dow Jones now has a star ongoing. So which means that you put a 2 double line here. Okay, if the star is strong enough, it will produce more selling presence and bring the price down. But if the market break above the star RL level, that means you will likely go to KTR plus 2 rather easily. Okay, now of course you can consider buy near buy level, but then it means that the OP will be sorry. Okay, we come to this guy later. Okay, so Ethereum, I already tell you the direction of Bitcoin, sorry, the gold and silver. So take note of that, 1810. Okay, let's look at Ethereum before we go to Bitcoin. Now, Ethereum itself, right, is now moving higher. Now, today is also a DJDD for Ethereum. So as long as the Ethereum is moving upward itself, right, it is likely going to test this 1669 moving average. Okay, so we're trying to see whether it's strong enough. All right, so the market should be heading towards 1668. The downside itself, right, if it loses that, and never mind, the downside can be all the way here. But the thing is 1663, I think to be precise. Question is, okay. All right, CCRY with DJDD to go up to 1669, it is very possible for Ethereum. It's not difficult at all for cryptocurrency space. Okay, for Bitcoin. Now, Bitcoin is also having a DJDD, but it's not as vibrant. The color is still staying at red, but nonetheless, it's all right. Okay, nonetheless, you can see over here. All right, there's DJDD, and this is the chart itself. And so you can see right now, right, the Bitcoin now is trading at 20,352. So the first resistance will be 20,728. That pipe will be the first resistance. If it cannot go higher, it may go back down again. The support itself is 19,692. Now KSI is red in color, blue bar have extended, so basically means the market is still bearish at the moment on indicator, but technical is calling for buy. So I think that maybe we can really see 728 later for the Bitcoin. Okay, 728. Yep. Okay, all right. So that is the Bitcoin. Now, before you go, let's look at the VIX before you go. Okay, let's look at the VIX right now. Now, this is VIX. Now, VIX has went up to the high of 27. Now, yesterday pulled down a little bit, 25. I still stick with my guns. I still think that it's going to move higher a bit. Okay, not so high, but definitely high enough to reach about 32 to 34. Okay. Now, I still believe that there's a lot more room to go for VIX. Okay, I already tell you my reason, and I think that it will already be happening over the next 2 days. Now, some people ask me about the US dollar. I already told you my US dollar. I still think the US dollar will continue to mount higher. 110 is my target for US dollar. I still think that one US dollar itself has a lot of room to go. And of course, you ask me about OXY. I said that OXY is a good counter to hold. If you're going to be pulling back down, just buying more. So if you are going to be buying more, it will be done like today, because if the market do a triangle, then of course it's going up, right? But I say no, too tired, so that the market drops down a little bit more, then from the bottom, bring it up. Okay? All right, last but not least, we have this this is the PCC, that is the put call ratio. All right, we're at a high level, so likely there will be some profit taking to come for the short sellers, profit taking up. And yes, indeed, this is the one that is asking me about my view on Tesla. I said Tesla should see further downside. I believe that Tesla will come back down to about 245 level. Anything higher than 245, I think it's quite dangerous to buy. I don't think it's worth it to buy. So 245, I think the market can come down to here, and once you get there, stock will be triggered, and then you buy back at 245, and then that will make some money out of it. Okay. All right, so that will be all for today's MAO. Thank you guys once again for all the time and support you gave to me over this time period. Now, definitely, we still have our regular videos, or just shorter videos, so it's easier for you all to watch. And also, you all won't wait so long for it. When the video is ready, we'll upload, and there'll be no exact timing when the video will be coming out. Okay, it's just basically every day I'll try to do one video, at least every day, one, to talk about either a stock or talk about a market. So it'll be much more easier for you to enjoy it, rather than wait the whole entire video to watch, and then it'll wait for me to finish, and that's going to be very tiring. Okay, that will be all for today. Thank you guys very much. Take care. Have a great day. I'll see you next week. All right. Bye-bye.